Hello and welcome to the Accendo Trader Group. This is our weekend wrap-up trading plan for January 2nd, 2010. Happy New Year, everybody. Our website is blog.accendotraders.com, where we put together effective video technical analysis trading plans on a daily basis. Trading plan helps us stay focused and disciplined, lets us know what's coming down in a market that could affect our open or new trades as we scan for new trades. And it cuts down our research time so that we can spend time with our family. So the week that was, well, we can see that all three indexes ended down for the week, primarily because of Thursday. We had a holiday shortened trading week because of the New Year. And of course that brought about light volume. Last week and this week were tremendously low volume. Traders are definitely gone on their holidays, and you can see Tuesday and Thursday were the two lightest trading days of 2009, and that's even including Friday, the day after Thanksgiving in November. So very light trading, and that light volume helped the late day, end of the day, last hour sell-off on Thursday. You know, a lot of that was fund managing, protection of profits, and so there wasn't really much going on this week. Nothing was coming out of the corporate sector. Nothing came out of economic data. On Thursday, we had initial claims come in better expected, 432,000 versus 460,000. Overall, we had the worst decade for the stock market, and of course that's mainly because of the last 2 years. So as traders come back, what do they have to look for? Well, we've got construction spending. But here we go on Wednesday. We got ADP employment, and on Friday we have non-farm. So we've got some news that can move the market, and we have several indexes at key resistance levels, and we'll talk about that as we get to the charts. But tomorrow, on Monday, we don't have much going on, and we do have some earnings out of the agriculture sectors: Monsanto, Mosaic, Lennar's Housing, and Apollo Group. But overall, I think we're going to be waiting for the two job reports for this week. I do want to point out one new thing that we're going to be doing for 2010. Most of you know that I started off with stocks and options, and even though I'm really focusing as far as investing for myself on futures on a day-to-day basis, I still have several investments in stocks. And so what I'm doing is on Facebook, and my name is Michael Glass. That's where I have all my Accendo Trader stuff as myself, at Michael Glass on Facebook. And they have the Kaching Investing IQ app. And what I'm going to be doing is, if you want to follow me, view my portfolio here, also updates on Twitter for 2010 on what I'm investing, start off with X amount of dollars. And one of the cool things about Kaching is if they have what are called geniuses here, find a genius. You click on that, you find people, you can see how well they're doing for the year, and then you can open that account and have it traded exactly like that genius. It's a pretty cool app, pretty cool website, Kaching. So that's one of the new things we'll be doing for 2010. So for our stock folks, check me out, see what we're investing. And as I said, if you like the strategies, you can open an account and they'll trade it exactly like the genius of your choice. So as we start off looking at the three major indices, the Dow, one thing that's important about the end of the day sell-off that we talked about on Thursday is it really brings us right back down to the uptrend line. This uptrend line is coming from the March lows. So it really brings us right back to the uptrend line. And it also pulls us back to this 20 moving average. So that's certainly great. Technically sets up a nice buying opportunity if that's what the market wants to do. But also it brings us back below 10,500. And we almost have another ascending wedge going on here. We can use the wicks provided as resistance provided back in early December, in November, brings us right back in here. So once again, we need to break out one way or the other. And even if you want to be more liberal and go with the highs of this past week as your resistance level, right around 540, 10,540. That still gives us a single wedge and letting us know which way the market wants to go for there. So we certainly have still some decisions for the traders to make as they come back next week. And then as we look at the monthly chart, again, you can see we are at a firm resistance point of the 50 moving average. December brings us right up here to the 50 moving average. This next candle here is already January. That's overseas futures trading, and again, where we were looking at that, there's a couple places. Again, we're looking at basically 10,900 as a target if we break the 50 moving average. Let's switch over to the NASDAQ. On the NASDAQ, we still have our uptrend line from the March, our uptrend line going, and we can see that we had this unbelievable breakout the last week and a half of December there, breaking above our 22.25 level here. We broke above this and really took off. That's why this is certainly a good reason why you need to set alerts in your chart so that you can catch these moves as the stock moves. So that was really great. And now the end of the day sell-off on Thursday brings us back down to the 2 moving average. Really be nice to see it come all the way back down to this uptrend line. And then allow us to make a decision from there about which way it wants to go. That also will bring us down to the 20 moving average. So, but we may not get that chance. So now we could, if the traders are happy, we can put an alert above Thursday's open, Tuesday's open there, the high of last week, and see if we break above and to newer highs. And when we switch over to the monthly chart on the NASDAQ, well above the 50 moving average, and we were using the 2330 as our target level if we continue to move higher. Finally, the S&P 500. And you can see on the monthly chart, again, we still haven't made it to the 50 moving average, so it's a little bit lagging behind. Let's go back over to the daily chart. And you can see that the sell-off brought us back down to the 20 average, which is nice. Again, possibly good buying area. And remember, 1120 was our breakout level for the S&P 500. We did break above that. You can put another alert there to see if we go back up or below the 20 moving average to see if we're going to come down and test the 50 moving average again as the traders come back. But again, on a longer term time frame, we can see that the 50 moving average still is our target if we're going to continue higher. Okay, we just wanted to go ahead and take a quick second and remind everybody that we are on Twitter, twitter.com/Accendo Traders. And this is a good way just to keep an update on what's new going on here with us at Accendo Traders. As you can see, when we update with some new videos, it comes on here pretty soon with our ka-ching and our investment portfolio. Those what stocks you're investing in will be updated here. Economic data, little things like that will all be updated here on our Twitter account on Accendo Traders. So go ahead and check us out. Go to the education part of our video. We're going to do a little something different. We're going to move away from trading in the zone for a second and really talk about what can we do to improve our trading in 2010. How are we going to distinguish 2010 as our best trading year? And really, when I think about it, I want to break it down into a pyramid and the structure to how to develop and improve your trading for 2010. First and foremost, you got to have a core market knowledge. You know, what investment vehicles are out there? You know, futures, forex, stocks, options. There's so many investment vehicles out there. You got to take the time to educate yourself about that and try to figure out which one of those align up with your style. Which one takes your risk tolerance and your investment goals and says this is the best match. Once you define your trading style and your investment vehicle, you now have to go ahead and implement a trading system. You can buy one, you can develop your own, wherever it is. Remember, we got a good video on trading plans that you can use to develop your own. Test one that you buy. But now you got to have a system, and more importantly, you got to have strategies that are a part of that system that help you get in and out of your trades. And so your system really has to have 4 components. Triggers. What are your buy and sell signals? Location. It's not good enough just to get a buy signal or just to get a sell signal. There's got to be a little bit more to that to set up your probabilities as of success. And one of those things is location. In addition, direction. Again, it's not good enough just to get a buy and sell signal. You got to have location, and it's got to be in the right direction. All these things are important. And then finally, one of the most important things is management. Stops. How much you invest per trade. All these things are important to any good system. So 2010, we want to make sure that you are taking advantage of our partners to improve your trading. We got a great futures trading room with a 10-day trial at $30. the best futures broker. E-mini margins as low as $300, and you get 20 free contracts to trade for us. Great charting platform that we use that I share in our videos. And of course, we got a futures trading plan that puts together all of that pyramid structure and also the 4 important components of a trading system. So thanks, guys. We want to make sure that 2000 is our best year ever, and I will see you guys next time.